Okay, so now we're back to our scenario. So we finished up entering in the journal for the 18th of June. So we already computed the 200 mugs, right? We sold that. We got the cash. We updated our inventory. So then, what has happened on June 20th?
Customer
Customer.
with cash.
Okay, customer A decides to just pay the whole thing in cash. So let's go ahead and review. When did we actually sold the items to customer A?
June 10th.
June 10th. Okay. Okay. What else happened to customer A?
Return 100 mugs.
Okay. So remember that doesn't have to.
Oh no, sorry, guys.
They had terms.
Yes. Did customer A return?
No.
No, they didn't. So that means whatever they owe us, it's for the full amount. But let's check out what the discount due date is. So in this case, I gave customer A generous time. Okay. So they have 15 days to pay. So did customer A meet the discount period? Yes.
Yeah.
Right? So, okay, so we sold to them on June 10.
Oh, okay.
So plus 10 days. I was plus 15 days. They have till the 25th. So in this case, did they meet our discount period? Yes, they did, because they decided to pay on the 20th of June. So success. That means we have to consider the discount that we need to take away from customer A. So let's go ahead and look at our journal once again. We sold to customer A on June 10. So here we are. That means they owe us a grand total of $2,706.25. Now let's take a look at the sales first. Okay, so we sold a total up to them $2,500, and then tax was $206.25. So when we're giving them a discount, right? We need to give them a discount off of the sales price, not the tax. So in this case, I offered my customer how much percent discount?
15%.
What was
10%.
10%? So let's figure that out. What's 10% of 2,500? $250 discount. So let's go ahead and journalize this, because we know one thing for sure, right? How did customer A pay us for their amount that they owe us?
Accounts payable.
Okay, so we're dealing with the customer.
Cash.
And we received cash. Good. So once again, we received cash, and then now we know that we need to have accounts receivable, right? Because we need to recognize what they owe us in grand total. So we already know, right? By going back above, right? We know the grand total that customer A actually owes us in grand total is going to be for the 2706.25. So 2706.25 is what they owe us in grand total. Okay? However, because they received a discount from us, right? Therefore, we're going to be receiving less cash because they paid within the discount period. So they deserve the discount. Now, we talked about the discount being 10%. So what was the 10% of the 2,500? It was for 250, right? Yeah. So, yes. So what account am I going to use to recognize this discount?
555 purchase discounts.
Okay, remember, did customer A okay, so they're a customer, right?
Yeah.
So did we purchase from our customer, or did we sell from our customer?
405 sales discount.
405 sales discount. Good. Right? Because it's a customer. they are going to receive a sales discount. Okay, 405. Okay, accounts payable is 103 and 102 for the cash. Now, if I'm giving them a discount, what else do I also have to give back to them? I have to give them a portion of their tax back. Okay, so with that being said, I can only do it for the amount that I actually sold it for. So if I'm discounting them at $250, how much tax am I going to be returning upon the $250?
$20.63.
So equal round $20.63. Sounds just about right. Good. So therefore, how much?
That was the 250, right?
250, yeah.
Okay.
So then, how much cash should I be receiving from customer A?
24.35.62.
24. 24.35.62. Good, right? How we calculated was I just took the total amount that they owe me, minus out the discount, minus out the tax to get me my total amount of cash that I should be receiving. So in this case, they got a nice discount from us. Okay. So now, I received $2,435.62. Okay. And the great thing here is we can note that they paid us. And when they paid us, they earned the discount. So customer A paid in full. And then you could say receive 10% discount. Okay. All right. Okay, excellent. Right. So then let's see what happened here as well. So the same day, on the 20th of June. Okay.
Sold 250 mugs at $10 each.
Okay. So then we end up selling another 250 mugs. Okay. So journal. So once again, since let me see. Cash. Okay, I guess you could squeeze in here. So it's 620. We received cash. Right? And we sold something and we also
Sales tax payable.
good. So we sold a total of 250 mugs. At what price?
$2,500.
2,500. So therefore, what is going to be my tax on this?
$206.25.
So therefore, how much in grand total should I be receiving in cash?
$2706.25.
2706.25. Okay. Perfect. And of course, since we're at the bottom of our journal, if you want to have a description there, just so then it looks, so then when you continue on forth, You can if you'd like, just because we're at the very end, and the transactions are going to be on two separate pages. So if you want to do that, you can do that. So I sold, what, 250 mugs?
At $10.
Okay. So therefore, when I update my inventory, I'm going to be on the next page for my general journal, page number 3. All right, so in this case, it is still June 20th, and now I need to figure out our cost of goods sold. Goods sold. Oh my gosh, my typing. Cost of goods sold. And once again, we're going to take this directly out from my inventory. So cost of goods sold is 501. Inventory is 150. So we sold 250, right?
Yes.
Okay. Let's take a look at our inventory on hand. Do we have enough to cover the 250 items? Yes, we do. Okay, so let's go ahead and solve for that portion. So it is now 620, 250. Okay, and this time, what's my cost per item? I only have one batch.
375, 526.
So again, we're going to use my equal round formula to solve up for what my cost of goods sold should be.
938 and 82 cents.
93882 cents. Good. So now we have to update my inventory. So in this case, I started out with 400 and now I'm down to how much? So 400 minus 150. Okay. And we also have to update my other side too because I sold a few items. So let's see, 1502.10. Subtract out, what was it? 938, 82. So therefore, I should have $563.28. Okay. So now this is where I need to be able to journalize this, which is my 938.82. So let's go to my general journal. Here I am. Cost of goods sold is 93882. And then I can also place in my little description here that I sold 250 mugs. Okay. Let's see what happened next. So we have I'm going to go ahead and pull the screen up for just a bit to see how many more transactions we have. So we have the 21st, 24th. Okay, so we're almost done, guys. So then what has happened on the 21st of June?
You purchased 750 mugs at $3.80 each with a freight cost of $80.
So 750 at 380 and 80. Okay. So where do you want to go first, the journal or the worksheet? Okay. So it is now 621. We purchased 750 items at $3.80 with a freight costing you $80. So therefore, what is going to be my total purchase price?
$28.50.
Good. Plus $80. $29.30. Therefore, what is going to be my cost per item?
3.90666666.
Good. Okay, so this is, we know that this is going to be a uneven number. So let's go ahead and plug it into my inventory worksheet on hand. So I should have a total of, I think this was 750. And then I'm going to reference this down below. And it should reflect that I should have a total of the 2,930. Okay. So there you go. I updated my inventory. Now I have a new batch. So the next time I sell something, I'm going to start from that batch. Okay, because it's the last thing that I purchased. So therefore, I should have to start with that one first. Okay. Okay. So now we have the crucial information, right? That we just purchased a total of $2,930 worth of inventory. So going over to my journal, and how am I going to journalize this?
Mugs,
Right, because we purchased it. We purchased inventory.
mugs, and accounts payable.
Right, because we placed it on an account. Oh, no, 201. So once again, that was the 2930. All right. And of course, the description, right? You want to be specific. I purchased these from Cuppy's Co. Okay. How many items did I purchase? I think it was 750. 750 mugs at $3.80 each. Okay.
With terms of 5/15 net 30.
Okay. Excellent. So there we have it. There's our purchase of inventory. Okay. All right. So then what has happened on the 24th?
Customer B paid in full with cash.
Okay, so let's go ahead and scroll up to see when we actually encountered customer B. Let's see. I think we sold to customer B June 16. Okay. Now, what else happened to customer B? What did he do? He returned 100 of those mugs back. So therefore, we only sold a total of 500 with him. Okay. So therefore, his discount date, right? We shortened it because of his liability, right? So in this case, he can only obtain the discount if he pays within 10 days. So did he meet the discount?
Yes.
Unfortunately, he did. So good for him. So there you go. Let's go ahead and calculate that discount. So if, right, we sold to him 600 mugs, but we ended up returning 100 mugs, how many mugs did we actually sell to this guy? 500 at $10 each. So let's go ahead and figure out what that 10% is going to be on. And on top of that, how did he pay us?
Cash.
He paid us in cash. So let's go ahead and visit our journal. So a few things that we recognize here is that it is June 24th, and we received cash from customer B, right? We have a sales discount, good, of the
Sales
10.
tax payable.
We have to give back a portion of his money back, correct, for the tax. Because we already charged the tax, right? Now we have to kind of undo it. And he's paying off what he owes us. So he's decreasing what he owes us. So account numbers first. Cash is 102. Sales discount 405,
230,
230,
and 103.
103. Right? So let's go ahead. We determined that we sold a total of 500 mugs, right? Because we sold originally 600, but we returned 100. So therefore, we only sold a total of 500, right? Times $10, okay? So therefore, what's 10% of $5,000?
500.
Exactly $500, okay? So because we're giving him a discount for the $500, how much of the tax money do we have to also refund him?
41.25.
$41.25. So now we have to kind of do a little math here because we have two transactions that were involved here. So originally, let's go ahead and find that transaction on the 16. So originally, we sold to this guy for the 600 was going to be for the $6,495. However, we ended up refunding him for the $1,082.50. So therefore, what should be my total that he owes me?
54.12 and 50 cents.
Good. So therefore, if that's what he actually truly owes me, then how much cash did he receive after the discount?
So that would be the 54.12.50 minus the discount.
Minus the discount, minus the tax.
47.125.
0.7125. Where did you get that? 0.7125?
He said 48.71. He said.
Oh, okay. Perfect. 4871.25. Yes. Okay. So this guy got a huge ass deal from us. Excuse me, my language. He got a good deal from us, okay? Because he started owing us $6,000, then it dropped down to $5,000, and now with another discount, he ended up getting this whole all 500 mugs for a total of $4,871. So he got a good grand deal from us. So and then we're gonna also have to note that customer B paid in full and he received a 10% discount. Okay. So there we're at. Okay. Things that we need to make a note is that customer B did in fact pay in full. Okay. So then now in our records, customer B doesn't owe us anything anymore. Okay. Right. Any questions here? Or are we okay here? Okay. So let's see what has also happened next. So now that we finished our transaction on the 24th, what happened on the 26th? 3 more days, guys.
Sale on mugs 50% off.
Yay.
Total of 650 mugs for cash.
Wow. So we decided to have a summer blowout sale. Okay. Summer sale. All mugs are 50% off. Woo, that's a really high discount. Okay, because who drinks coffee in summer? I mean, I do, but this is coffee mugs that we're selling out. So maybe that's the reason why, because most people won't even use those coffee mugs until towards the winter. So we decided, you know what? Let's do a 50% discount off of all the mugs. And people came in, they decided to, you know what? Let's buy them. So we sold a total of 650 mugs and we received cash for it. So in this case, let's journalize our first thing here is that we sold something, right? So it is the 26th. We sold it for cash. Good. What else do we need to recognize? Yes, right? We need to claim our 50% discounts.
And sales and sales tax payable.
Good, right? So in this case, we don't need to refund the tax because we never charged it in the first place. So there's no tax for us that we have to undo. So in this case, we're just going to charge the tax straight up upon whatever the discounted amount is for. So here's sales tax payable. So once again, cash is account 102. Sales discount is 405. Sales is 401 and sales tax is 230. So now let's go ahead and figure out what was the total amount of sales that I've incurred. I sold a total of 650 mugs at $10, right? So how much was my total sales? 6,500 mugs, okay? Now, how much was my discount off of that?
50%.
50%, or you could just divide the whole thing by 2, but I'll go ahead and do 0.5. There you go. So what is going to be my total amount of discounts? $32.50. Okay. And then lastly, if I'm going to be discounting this amount by the $32.50, therefore, how much tax should I be able to incur? Or how much tax do I need to collect?
268.13.
268.13. So in this case, I just use the number because I know if it's 50%, it's easy to calculate, right? It's going to be 32.50. So therefore, I just multiplied the tax for that, and I got that. So therefore, how much cash should I actually be receiving?
We did, for the taxes, we did the 6,500 minus the discount, right?
In this case, I already know that if this is 50% discount, I just took this number here. So instead of having to enter that piece of information in, I just went ahead and just took this one. Because I know that my discount amount is going to be equal to this $32.50. So I took a shortcut here. Because if I took 65 minus the $32.50, I'm just going to get $32.50.
That's what the price is, so
Mm-hmm.
times 0.825
Mm-hmm.
the 68.13, she said?
268.13, yes.
Okay.
Okay. And therefore, right? So how much cash should I actually be receiving for the sale? $35.18.13. Is that what you said? Perfect. Okay. So therefore, man, that was a huge discount, and that took a toll on my profits. But hey, comparing to my regular daily sales, I tripled my sales because I had this sale. So in this case, you know, at the end of the day, you definitely don't want to keep your inventory in stock. You definitely want to sell, right? So even if you took a discount off of the original selling price, right, instead of selling it for $10, it's $5, you still get a gain of a profit at the end of the day, right? Because, you know, you originally purchased it for $3 and something cents, but you're selling it for $5. So in this case, you still end up getting some of profit out of it. So once again, I'm going to go ahead and just, okay, so you have to also, in this case, it's definitely very important that you indicate that there was a sale going on, because here, I don't know what the sales discount is, so I need to place that information here. So I'm going to say I sold 650 mugs, okay, at 50% discount discount summer sale. Okay. All right. Now that I finally recognized my sale, what do I need to do next? We got to update our inventory worksheet. So before I do that, I'm just going to go ahead and lay down my foundation real quick, just so that I don't forget to do it when I come back. So cost of goods sold. And of course, I'm going to be updating my inventory. All right, let's go ahead and go into my inventory worksheet. And this time I got rid of 650 mugs on June 26th. Oops, 6. Okay, we sold 650. Now let's take a look at our batches. Okay, we have 2 batches. Which one am I going to take out from first?
Last.
Oh, I'm sorry. Yes, the last one. 750. Okay, good. So if I'm going to take all that money out, or I guess inventory out, right? At what cost is it going to cost me? Right, the 3.9.
25.39 and 33 cents.
$25.39.33. Is that what you said?
Yes.
Perfect. Okay, good. So now let's go ahead and update our inventory. So now I sold a total of 650 units. So 750 minus 650 should give you 100. And boom, I should get 390.67. In this case, that pans out. That's correct. Okay. So there we have it. We have that and we sold that. So therefore, we need to take away and update our journal to say that we sold a total of 2,539.33. So 25.39.33. 25.39.33. Okay. And once again, I need to place the information that I sold 650 mugs. Okay. Okay. Everyone good so far?
Yes.
Okay. Almost done, guys. We got 2 more days left. So customer C wants to buy all 100 large 16-ounce mugs, okay, at $10 each from you. And you decide that you're going to offer him an additional 10% discount, and he paid with the Visa credit card. Okay? So in this case, he decides to come into our store and says, "Do you guys have bigger sizes?" And we say, "Yes, we do." And then we say, "We have 100 of them." He says, "I'm going to take all 100, and I'm going to pay you with a Visa credit card." So in this case, we sold it to him because he's getting this inventory off of our hands, right, and buying in bulk. I decided to offer him an additional 10% discount. So how am I going to journalize this transaction? Checking. Good, because when credit card charges are made, okay, if a customer is charging their credit card, it should be directly wired to your checking account. Okay, so 628, therefore, it should go directly to our checking account.
Sales discount.
Sales discount, right, because we offered him the discount.
Sales tax.
Sales, right, because we haven't charged him tax yet, so therefore we don't need to refund it, so we're going to charge the tax after the discount. Good. Ay, my typing is so bad today. All right, so once again, 101. Discount is 405. Sales was
401.
401 and taxes 230. So if I sold to him a total of 100 mugs at $10, how much does he owe me? I mean, sorry, what was my total sales? 1,000. How much was the discount for?
10%, which would be $100.
Perfect. Right? So then this is where I have to do my calculation here. Okay, I'm going to do it on the side so it's a little easier. So it should be for $900. So therefore, what is my tax that I'm going to be collecting from him?
74.25.
Good. And so therefore, how much money should be wired to my bank account?
974.25.
Yes, right? Because 900, right, plus the $74.25, you should be able to get that. 974.25. So that's directly going into my bank account. Awesome. Okay. And once again, you also need to make a note of this, that you did sell to this because, again, you're receiving money from customer C, right? So in this case, I'm going to say I sold 100 large mugs, okay, at 10% discount because I gave him that discount. Okay. All right.
Did you have to note that it was to customer C?
Yes. Good. Thank you. Sorry. I think I was thinking about it, but I forgot about it. So sold 100 to customer C. All right. So let's go ahead, and now that we have that information, what do we need to do next?
Cost of goods sold in mugs.
Cost of goods sold and your mugs. Okay, so 501 and 150. So let's take a look at this because this is the trick question, but it's also, we need to be able to figure this out. All right, so in this case, if I am adding it into my, or if I'm taking away from what I sold, so to, what is it, the 26, 28, 28? Now, if I sold 100 mugs, right, in this case, if you did your calculations correct and you kind of figured out where you placed that 100 or got the discount for, now, it's probably, let me see. It's in the second batch that we purchased, right? Which in this case, I don't have it. Okay? So in this case, when we're figuring out inventory on hand, right? We still have to calculate our inventory just exactly how it is saying, right? If the method I'm using is last in, first out, then your automatic assumption is you're just gonna have to take out from the batch that you last purchased, okay? Just because in this kind of area, right? We've already assumed, right, by placing the inventory back into our inventory on hand, our coffee mugs, right, was in the second batch, but in this case, when we sold the inventory, we got rid of it already. So in this case, that's one thing that you have to notice is that once you start figuring that out, right, usually general rule of thumb is you would actually place it into the inventory, but you would separate it out, right? So you actually have it as a separate unit. But in this case, I'm just showing you as a general idea. If for in this instance where you have those 100 items and they're lodged into the second batch, but you've already clearly sold the second batch, therefore your only assumption is just to go ahead and go forth with your concept, which is the last ones in are usually going to be the first one out. So in this case, we're treating as if all the mugs, doesn't matter what it is, as long as you keep your batches separate, is exactly how you're going to calculate it. So in this case, I have exactly 100 items left in my last batch remaining. Okay, so therefore, I'm going to get rid of that. Okay. So in this case, it's going to cost me $3.900667. So therefore, if I calculate this right, or in this case, I know how much it is going to be. It's going to be for the $3.9067. Okay, which once again, it can go ahead and clear this out. So therefore, at the end of my inventory, I should have 150 items left. Okay.
I have a question.
Mm-hmm.
Next to your total cost, you have the amount $563.29.
Okay.
And that's what I actually come up with at the very end. I've actually erased my worksheet 3 times and redone it 3 times because up at the beginning somewhere my numbers are slightly off. But I've used equal round and everything else. My cells are formatted correctly, and that's why I was wondering why you have the amount to the right that I have.
Okay, so if you remember, right, as we went through the scenario, we ended up rounding both the cost of goods sold and the inventory on hand. Now, this will make a lot more sense, especially when we dive into utilizing the ledger, because your ledger must match your inventory worksheet. In this case, I have a penny difference, and that's exactly what we were talking about. Is that you have to be very careful with your calculations, because we figured that it was supposed to be 15 cents, but when I rounded it up, it gave me 16 cents. But you can't, in this kind of sense, if you're going to round, you always want to keep sticking your number to the cost of goods sold, because this one's going to give you what you have to put in the journal. Your journal cannot show that you have a half of a penny. You must round it, because in the journal, it has to be in terms of dollar value. You can't charge a customer half a penny. You're subject to have to round up. But in here, our inventory worksheet, if we round up or round too early, we can pose a lot of issues when calculating our inventory on hand. So in this case, because if you look at the number here, we have 3.755. We have an instance where we have half a penny. So this one can pose that we can either round up for the cost of goods sold, and we're going to have to be subject to round up for the inventory on hand. So therefore, you are missing a penny in between. And like I've said, you will be able to see it when we dive into our fictitious business, when we start using our ledger, because your ledger is also in terms of dollar value. You can't have a penny, just half a penny lying around in your ledger. Okay? So in this case, the reason why I have these 2 numbers is just so that I can ensure myself, right, when I'm calculating this, that this is going to be correct, right? If I didn't round my answer, that it should give me this, what was it, 563.29. So basically what I did here was I just ensured that my number that I'm going off of is correct, or give me like a guidance. So in this case, this one right here is the unrounded version. This one in the actual column is the actual amount that resides in your inventory right now. Okay, remember, because we have to distribute that 1 extra penny into the cost of goods sold.
I'm gonna have to watch the video because I'm lost on that.
Okay.
I mean, because like I said, I've done all the math with the calculations and that, and I still don't understand where you're at with that half a penny.
It's because we rounded it up into the cost of goods sold. Okay. Once again, this will make more sense when we dive into the fictitious business, right? When we have a ledger running and you see that discrepancies because you have that half of a penny. In this case, both scenarios, if you have half a penny, you're going to be rounding both the cost of goods sold and your inventory on hand because of that half of a penny, right? 5 is the worst number you can ever deal with because you have to round, you have to choose to either round one or the other. In this case, right, if we deal it like regular math, if you have half a penny, you're going to round up. Same thing on this side. You have half a penny, you're going to round up because that number 5 tells you to round up.
Now, does the equal round in Excel automatically round up?
Yeah, that's the point of equal round. Yeah, so if the number is 5, it will round up. If it's a number 4, it will stay the way it is. It won't round up at all. It will just stay, it will round down. Okay, so yes, you definitely want to go ahead and take a second to look at that because once again, that extra penny is already calculated in your cost of goods sold.
Yes, that's where I'm lost because I'm looking at your sheet and my sheet and I don't understand where that half a penny was put in.
It was put in when we sold our first 100 items right here. Okay, so the first half a penny was right here. And this is supposed to be this is supposed to be 53, and I believe it's 52 something else. So this is where we saw our first problem here was that we end up getting a rounded up number for selling this extra 100 units. Okay. So yes, I would definitely recommend you to look at the video again, just because it is.
But see, my figure is correct there for that 100, and I have the 375.53. I'll have to work on it over the weekend and look at it because.
But you said it'll make more sense when we get in the fictitious business, right?
Right, because we have the ledger. The ledger will, every time you type in your ledger, right, it's a running balance. Now, if I'm adding in my my inventory as whole numbers, right? I purchased my inventory at $1,925, right? That's an even number right there. Okay? But because we have that half of a penny that we have to deal with, right? When we round up, because when we do the cost of goods sold, we must round up due to the conservatism rule. You round up when you cost of goods sold. And here, because it's rounding up by that half of a penny, that's where it threw off our inventory on hand because, once again, we also have to remember that the matching principle must hold into place. Okay? So if you did this if we did the calculation with the, like just using the straight figures, then you'll see exactly where that number comes from. Instead of using the equal round in that one, right? You'll see. You'll see where that missing penny comes from. Okay?
I just don't understand that. I'm using the same math, and I still have an extra penny. I'm just this.
It's because you're rounding up. You're rounding up twice. You're rounding up the cost of goods sold, and you're rounding up your inventory on hand. Where in this case, you have half a penny.
Right.
So you're creating a penny out of nowhere.
Okay, so then where did I? Okay, but what I'm asking is this: I don't understand where I rounded up twice to get that.
Right here, on this date right here, I just told you, right here. When you calculated this, you rounded up by 53. Or actually, no, let me actually, I think it's this one. I think it's this one right here. This one's the one that posed the problem here. Our first time we entered this one in.
Yeah, that's the one. Okay, because I'm showing 81 cents. I just see that right
Mm-hmm.
now.
Mm-hmm. Or the yeah. So if okay. So yeah. So if I did this formula like a straight formula, it would show me that it's actually supposed to be 81, yada yada yada, right? There you go, 81 and a half. So this right here tells me I need to round up. And if I round this one up, and with this, if I were to calculate it, right, it'd be my half a penny would still reside here. So if this is 81 and a half, and that's whatever and a half, and you decide to use equal round, you're doubling up on your rounding. So therefore, you're creating a penny out of nowhere, out of thin air.
Okay, let's see. On that same line, my cost of items different. Let's see. You know what? I'll put yours and mine side by side, and I'll just have to watch the video because it's still not clicking as far as the half a penny. I don't want to hold up any more time.
Okay. All right. Well, yes. So, okay. All right. Because that half a penny, it just sucks when you have to round up on both sides. When you, in reality, you can't create a penny out of nowhere. But in this case, it's just because of that figure, right? It's just that number 5, right? Excel only knows if it sees a 5, you're going to round up no matter what. So that's where we have to make sure that our calculations are very, very clear and precise because of that dangers of, round that half of a penny. Okay. So last but not least, then you're going to pay all 3 bills that you owe to Cuppy's Co. all on one check, number 201. And you should have a total of 150 units left on hand, which we do. So in this case, let's go ahead and look at how many purchases we've made. We've made a total of 3 purchases, right? So the first purchase that we made was on June 3rd, okay? Now, this one, we had problems and issues with this purchase because we ended up getting 50 broken mugs in this purchase, okay? And once again, did we meet the discount period if I'm going to pay at the end of the month? No, we don't get it because, we didn't pay in time. So we lose this discount right here, right? Then let's see, the next time we made a purchase was on the 12th. Once again, we purchased 500 mugs, but 100 of those mugs end up being the wrong size. So in this case, we end up getting a discount off of those 100 mugs. Therefore, we tampered with this bill as well. So in this case, this one, right? Did we make the discount period if we're going to pay at the end of the month? No, we just missed it by 2 days. Or, 3 days, right? It's the 12th plus 15. Should give you the 27th. Yeah, we missed the discount by 3 days. So therefore, we have to just only calculate whatever it is calculated for. And then last but not least, we made our last purchase as of the 21st of June, right? We made a purchase of the 700 units, but no changes, right? Everything that we got from this coffee, this batch right here was perfect, okay? No changes, no anything to this purchase. However, did we pay within the discount period? Yes, we did. So here, our first discount is going to be residing in our third bill. Okay, so let's go ahead and at least journalize the foundation here. So if I'm attempting to make a payment to my bill, so in this case, go ahead and start on the new journal because there's a couple items that I have to put in there. So page 4, so this is 6/30, right? We're at the end of the month. Right? would you normally pay off what you owe?
Checking.
Okay, good. Okay, checking is going to be one of them. Right? We're going to decrease our checking account because we're paying it off, right? So checking is one of them. Good.
Accounts receivable.
Okay, so that's for your customers. We're making a payment to my vendor.
Accounts payable.
Accounts payable, right? And we're going to debit it because we're paying it off. We're decreasing what we owe because, we're making a payment to it. So we no longer owe it. So in this case, I'm going to decrease it by debiting my account. And then last but not least, I should also recognize what?
Are we doing inventory as well?
Yes. Why?
Because we still got to make sure what we have on stock and what our.
All right. So if I should be receiving a discount, right? Where am I going to take the discount out from? Right? Everything that you put into inventory, you're going to take everything out from inventory. So in this case, my purchase discount, right? Because I should receive a discount off of my purchase, should come right out from my inventory, right? Because I paid for the mugs, I paid them at a lower price. So therefore, I need to adjust my inventory to reflect that I got a discount off of that mugs. Okay? So let's go ahead and figure it out. Let's start with my accounts payable, and then we'll talk about the mugs in a second. Okay? So once again, let's take a look up at top, right? At the very, very beginning, we made a purchase, right? So here we should have a grand total of $3,750. However, we ended up returning $182.50. So what I'm doing right now is I'm subtracting it out. Okay. Then on the 8th, right, we end up making another purchase of inventory for $19.25. However, we also subtracted out because we got a discount, right, for $93.75. And then lastly, we also increased our accounts payable by making another purchase on the 20th. When I find the 20th. 20th. Here we go. Therefore, now we owe an additional $2,930. So therefore, right now, I owe a grand total of $8,328.75. So what I did was I added all three bills together, okay? And I subtracted out the money that I got either discounted for or I had a refund for. So in this case, I added all three bills and subtracted out the discount. Subtracted out the my original refund for the full refund and the 25% discount off of the wrong mugs. So in this case, my grand total shows that I owe a total of $8,328.75. Okay. So now the next thing I'm going to do is I need to calculate my discount. So let's take a look at my mugs. Okay, if I made a purchase on the 20th of June, right? I originally purchased 700 mugs at $3.80. Okay, So if you want to, you can go to your inventory worksheet and you can figure out that number here. So if I'm have $3.80, right? And I get to take a discount. So the amount that I'm taking a discount off is going to be off of this $285, $2,850, right? Because that was my last purchase that I get to take a 5% discount off of. So in this case, if I'm going to take this away from my inventory, okay, I'm going to go ahead and calculate it right now. That I'm going to go ahead and calculate my discount to be the negative 2850 times 0.5, right? That's my discount, right? I get to take 5% discount off of my original purchase price. So in this case, I should be getting a total of what's 5% of 2850? $142.50, right? Is everyone clear where I got this number from?
Yes.
Yes.
I'm calculating the discount right now because I get to take a 5% discount off of my last purchase, which was, I didn't make any changes to this, so my original purchase price is going to be for the $2,850. So I get to take 5% off of that entire amount. So therefore, it gave me a total of $142.50. So let's go ahead and update my journal first, and then we'll talk about the second part afterwards. So in this case, I need to take away $142.50 from my mugs because that amount of money is something I didn't pay for. So therefore, I need to take it out from my inventory. Okay? So therefore, what is my total checking going to be? What am I going to write this check out to for?
$8,186.25.
Correct. Okay, because I'm making a payment to all three. The other two I've already calculated for, and this one I'm paying a discount on it because I met the discount terms. So in this case, if you add your total amount that you owe minus out your discount, you should be paying this vendor a total of the 81.86.25. Okay, and I'm just gonna go ahead and make a note here real quick, just so then I can finish up my journal. So Cuppies Co, right? Oh no, sorry. Let's do this. Let's change that. This is payment to Cuppies Co. Okay, comma, check number 201. And this is where you could say I made purchases, okay, for June 8. I'm gonna write purchases on June 8. Okay. I also made the purchase on June 10. And then the last one was June 21st. Okay. And then I'm going to write here that June 21st. And then I'm going to get with 5% discount. Okay. So that I'm just finishing up my journal here. So now that I've figured this out, right, I'm gonna write a check for the less amount because I don't owe Cuppies Co that much money, right? I should deserve to get the discount because I made the payment on time. So therefore, that's what I should be writing a check out for. So now let's go ahead and take a look at our inventory worksheet, right? I should be taking a discount off of the last units that I purchased. Now let's take a look at an inventory worksheet. What's the problem here? What's the problem here? If I took a discount off of my last batch, what's the problem here?
Take it out of our total cost?
We have to take it out from the total cost because look, I end up selling everything from my last batch. I only have one batch remaining. And unfortunately, because of that rule, because we decided to use the last in, first out rule, if we end up making that discount payment, right, then we only have one option and one option only. We're going to have to just subtract it out of whatever remaining amount that we have in our balance. In this case, I only have one batch left. So I'm going to go ahead and apply the discount directly off of what I have. So in this case, right, I still have 150. However, I need to go ahead and calculate and subtract out this additional 142.50 out from this total amount here. So in this case, this is 56328, and we're going to subtract out that 142.50. Okay? Because I only have one batch and I made the discount, so therefore I'm just going to discount whatever I have available. So in this case, I should have a remaining of $420.78 remaining as my total batch for inventory. Okay? Any questions?
I think I'm good.
Okay. All right. Okay, so once again, yep, I will post these